This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. What follows is a recent interview, an interview of me for a crypto conference. I hope you enjoy.
Hello guys, welcome back here to another session in the Crypto Mastery Summit. Today we have Michael Covel join us. Been a trader for a long while, written several books. So Michael, say hi to the audience.
Hey, thank you for having me on. I appreciate it. If people do not know about me, I come at trading from a very particular style that we will talk about, something that every crypto trader should know. And if they don't know, they're just not going to make as much money and they'll probably lose money. That's simple.
Pretty excited about what you have to share. Then could you perhaps even intro yourself a little bit more and maybe give a history of yourself?
Sure. My story goes back to the 1990s. Somebody who wanted to work on Wall Street, did not have the pedigree, did not have the resume, didn't have shit that Wall Street was looking for. But I did find myself in a very first meeting with any financial professional was with the former CEO of Salomon Brothers, which was back at the time like a Goldman Sachs or a JP Morgan before they changed ownership. I didn't get a job at Salomon Brothers, but fate. I walked into a bookstore, something that existed in the 90s, walked into a bookstore and I saw a magazine. The magazine said, Wall Street's top 100 paid for the year. And there was a guy on there who had just made $35 million in 1 year. And he was like number 35 on the list. He happened to live 90 minutes from my house in the state of Virginia. And so I thought, well, this is amazing. Who is this guy? And the little article was really small. And it said he was a turtle trader. And it said that he was not trading like typical Wall Street traders. And that he had learned this strategy from somebody. And I thought, well, this is fascinating. Who is this guy? You know, I get in my car and I drive 90 minutes to try and meet this guy, being naive. And he didn't meet with me that day, but he did end up meeting with me. His story was fascinating. And this story is timeless. And I'm sure there's probably some people that have heard this story, but his story was quite simple. In the early 1980s, he saw an ad in the Wall Street Journal, and the ad was looking for trader trainees. He answered. He got hired. 20 people got hired by the most famous trader at the time, a guy named Richard Dennis. Richard Dennis taught these traders a set of rules that you could use on any market, whether it's corn, stocks, palladium, gold. It didn't make a difference. And you didn't have to know anything about these markets to trade them. You just had to have these rules. You didn't have to be an expert in corn. You didn't have to be an expert in palladium or gold or silver or soybeans. You didn't have to know shit about any of these markets, and you could trade them. Okay, everyone's jumping ahead and realizing this is why Mike is going to be talking to us about crypto. Because yes, you don't have to know shit about crypto to trade crypto, period. Anyways, to stay at the story for a second, this guy gets hired. 20 other people get hired. The teacher was this guy, Richard Dennis. He nicknames his students the Turtles because he had been to a Singapore turtle breeding farm and he wanted to grow traders like they grew turtles. This is all fascinating to me. I'm on the outside looking in. I don't know anybody on Wall Street. This group of 20 worked for him for 4 years. They made $100 million in profit. Okay, $100 million doesn't look great today when everyone's saying they're making billions and Bezos is worth $200 billion. But let's face it, $100 million is not chopped liver. Eventually, the program stopped. They went out on their own. They became hedge fund managers. I heard about this story 1996. I was fascinated by it. Well, I actually heard about it earlier than 96, obviously. It was about probably 94. And I put up this website in 1996 called Turtle Trader because I learned what was going on. And then I started helping other investors to trade this way. One thing led to another, many books. a podcast with 1,000 episodes, Nobel Prize winners appearing on my podcast. It was just a fantastic path to go down. To cut to the chase, like I just said, you can trade any market if you have the right rules. And you don't need to know anything about that market. And if you can accept that, there's going to be people listening right now that are already thinking in their head, oh, no way, he's wrong. I have to know this about Dogecoin, and I have to know this about Bitcoin and this about Ethereum. And those people aren't going to be convinced, okay? They're going to be stuck. However, the people that will make the most money will trade crypto like what we're going to talk about today, 100%. Because if you're going to trade crypto, you have to know, when are you getting in? When are you getting out? Nothing goes up forever. Things go up and down. We all know that. Everyone knows that in the crypto space. So how do you effectively trade big trends that go up and down unpredictably? You can't predict a goddamn thing. There's nothing you can predict in this world. I mean, look at COVID. So how can you trade these trends if you don't know anything about the fundamentals of what's the latest mining update or what's China doing? Once you just let go of all that and say, the only thing that I care about, what is the price of, for example, Bitcoin? That's all that matters. What's the price of Bitcoin? And if you know the price of Bitcoin, then you have the only piece of data that's real data, and you can trade that. That is the big picture update. We'll probably break it apart some more. I don't want to keep talking without letting you get some questions in.
Well, what an exciting story you had there. Is he still alive, or this Messiah?
The main trader is still alive. Some of his students have gone on to crazy fortune. In fact, his most successful student was a guy named Jerry Parker, who was just on my podcast 1000, episode 1000. So Jerry Parker was a fabulous case study. So there's a cheap plug, there it is, but that's the full story. If you want to know exactly how this story started, there's actually some rules in there that kind of show you the basics of what I'm talking about. And to take a step back too, the basics of what I'm talking about is a strategy called trend following. Trend following is a strategy that says, we've got the price, we can believe in the price. When should we enter? When should we exit? What markets should we trade? And how much should we bet? How much should we bet on any particular trade? And that's always a function of your particular bankroll. How much money do you have? Because if you risk too much, well, okay, you might get lucky and you might make a bloody fortune, but you also might lose it all. And if you lose it all, if your risk management is crap and you lose it all, you're out of the game, you can't play.
So you're saying when you should buy, when you should sell, those two things?
Yeah, for example, the thinking is quite simple. For people that are really geeky about this, you could find the research. Not only is there real world performance research from multiple star hedge fund managers that you can find, there's also the academic research. And what it comes down to is the idea of momentum. Basically, things in motion tend to stay in motion. Very simple concept. If you believe that things in motion tend to stay in motion, and you can't predict when that motion is going to come, typically, a best way to do this is when a market is making an all-time high. So if a market is making an all-time high, that's when you buy. Some people can be like, what are you talking about? I'm not waiting for it to get cheaper. I want to buy when it's in an all-time high. Yeah, you want the momentum on your side. Now, if you think about that, some people might immediately be thinking, no, I want to buy cheap. I want to buy cheap. But anyone that's followed Bitcoin knows damn well that it's all been momentum. It's all been momentum. So if you've got a momentum strategy like trend following, something that defines your entries, defines your exits, defines how much you're willing to bet on each trade so you don't blow out, so you can come back to play for another day. There you go. Then you got something interesting. And the tricky thing, again, it's not really tricky, but the interesting thing is you don't have to know anything about crypto. You guys are doing a crypto conference. Of course, there's going to be many people that have crypto expertise. There will be nobody that will come on, and I'm not being arrogant or cocky because there's plenty of people that know what I know that could be coming onto your event and saying the same thing. But nobody else is going to be giving the best trading strategy for trading crypto other than what I'm saying today. There is nothing else because everything else is going to be predicated on, well, you know, Bob, he kind of heard a rumor, he knew something, he took a gamble, or, you know, he took a guess. It's not like an actual strategy. I just bought and I held it forever and I got lucky and I never got out. These aren't real strategies, really. This is true believer stuff. This is somebody that bought Apple Computer in 1985 and held on till today. Go look at the Apple Computer chart from 1985 till today. Straight up, straight down, straight sideways for 10 years, then straight up. Same thing with an Amazon chart. There has to be a solid strategy based on the price of, for example, Bitcoin or Ethereum. That's what you're following every day.
Okay, cool. I'd definitely be interested in hearing more about this in detail and how you find these trends. But before we dive into that particular strategy, could you maybe just explain a bit about what some of the biggest mistakes you see people make when it comes to trading strategies?
The biggest mistake is basically people are gambling. It's like Vegas. I heard something, so I did something. I mean, I can't tell you how many female friends have reached out to me during the crypto rise. They don't know anything, but they've heard something. So now they're willing to throw money at something. There's no plan at all. I always break it down to say, well, there's 5 particular rules that you need, every trader needs. What markets are you going to trade? When are you going to enter? How much are you going to bet? When are you going to exit with a loss? And when are you going to exit with a gain? That's what it comes down to. Most people don't come at it that way. Most people, they wait to buy something cheap. What if it never becomes cheap? I don't know what Bitcoin's at, 51,000 or something. What if Bitcoin never goes below 51,000 again? And what if it goes to 1 million? Then everyone's going to be talking about who's going to give a shit what happened between 0 and 51,000. It's going to be irrelevant. That's not built into people's thinking. We want to be like Warren Buffett, because Warren Buffett is like, let's buy something cheap and a monopoly, and we own Coke and we own Gillette razors. Okay, but he's the only guy. There's only one Warren Buffett. It's not worth trying to compare to him. It's worth saying, what can you do? Not having a set of rules is a big mistake that first-time traders make. And I've not talked to too many crypto traders that have got a solid set of rules. I think it's a great thing that a lot of young people in particular happen to be standing at the right place and time to believe in something, and it took off. Because I got to say, a lot of young people today have gotten screwed over by the boomers. So I think it's great that a lot of young people have gotten a chance to make a lot of money in something. But it's time to get past just holding for the sake of holding and no plan. You got to get serious about it. If you really want to make money with it, you got to be serious about it.
Sure. Having a plan is essential. Could you explain about this trend following plan then? You mentioned your 5 rules. I think that's great. Maybe dive a little bit deeper in on each of them, or however you would like to explain it.
Let's just talk about entry. When would you enter a market? This is people's number one question. It's probably the least important issue because you could almost do a random entry. And if you've got a good way to exit and a good way to bet size, a good way to manage your risk, you'd be okay. But let's talk about entry. Typically in trend following, what you're doing is you're buying higher highs or selling lower lows. If a market is, let's just say whatever market, we could say Bitcoin, we'll stay with the 51,000. So let's just say that, and I haven't looked at the chart exactly, but let's say the 51,000 area, let's hypothetically say that that's a new 100-day highest high. Bitcoin has now made the highest high that it's made in 100 days. And that might be somewhat accurate. Then you buy. Now, people might say, well, what does that mean? I don't know what that means. Does that mean it's going to keep going up? Well, we hope it keeps going up, but we don't know. What's the plan then? Well, you buy with a stop. That means when you get into, you take your 100-day highest high of Bitcoin, you take your 100-day highest high, but you know each particular situation, each particular system can be a little bit different. But what you don't want to lose is you don't want to take that 100-day highest high, you enter Bitcoin. Let's say you've bought, for the average person, let's just say it's 1. They bought 1 Bitcoin. How much money can you lose? How much money can you lose and still have a trading system? Well, a typical trend following loss structure would be something like, we don't want to lose more than 5 to 10%. And I'm being very general here in my description. You enter at that 51,000, you don't want to lose 5 to 10%. So if you lose 5 to 10%, you get out. You take your losses. Well, then what do? You wait for the market to make a new highest high again. What if the market turns around and goes back up and hits 52,000? You're buying again. What you're trying to do is you're trying to get on board a moving train that you don't know how far it's going to go out of the station. This is the kind of strategy you have to have. Otherwise, and this has worked, there's plenty of people that have made billions of dollars doing the other way. And the other way is, I believe in Bitcoin. I bought it. I bought it 10 years ago, and now I've made a bloody fortune. I believe in it, and I bought it. People have read Nassim Taleb's books. That's just not a solid strategy for everyone. That's a solid strategy for the person that bought it 10 years ago and has made a bloody fortune. I say, great job. But it's not good for the person that's showing up today unless they just want to have this, I believe. It's like the X-Files, I believe. That's not the best way to handle something when money's on the line. When money's on the line and you're making bets and you're risking money, there's probably people listening right now that took bets in crypto and lost their fortune. They lost their money. And they're listening now because they're trying to figure out how to get back and get started. But you don't want to be that person that doesn't have any risk management strategy. You got to stay in the game. If you don't have chips to play, you can't go to Vegas.
Makes sense. When you're going to enter, you're recommending buying higher highs and selling lower lows.
Yeah.
One particular time frame you mentioned was 100-day.
Yeah, 100-day could be an example. It could be 200 days. Some people might bring it to a lower time frame, but you're looking for something where the market has been in some kind of a range and then it's jumping. And that jumping is a chance to get long, or if it's going down, a chance to get short. It's counterintuitive. People don't want to think this way. We all grow up with the idea, well, Bitcoin's at 51,000. I will buy when it gets down to 20,000. Well, what if it never gets to 20,000? Now, I do think that some younger people today probably get this instinctively already, that trying to wait for a retracement might not be the best strategy. The point is buying momentum.
Okay. That's one of your rules, like when you're going to enter. You also mentioned what markets, with crypto in particular, right? There are some of them that are just like up and down, up and down.
Yeah. And that's tricky. It's probably not what crypto traders want to hear, but if you can believe what I'm saying today about how you can trade crypto with trend following methods, well, then you just became like the turtle traders also, which means not only could you trade crypto, you can now trade equities the same way. You can trade gold the same way. You can trade anything the same way. Let me give an example about how crypto has moved into mainstream hedge funds. Once crypto went to the Chicago Mercantile Exchange, the CME, once to their Bitcoin futures, that's when the trend following traders that I know said, okay, now I can trade crypto. I don't have to figure out a Coinbase account or whatever. I know how to trade futures. So once futures on crypto existed, people were like, okay, game on. I know how to trade futures because I trade gold futures. I trade soybean futures. I trade the S&P futures. I can trade crypto futures with trend following methods because it's based on price. That's a way that people could really think about this, because here's a potential problem that's going to come into existence. If you have, and I know this, I've not done the exact calculations, but I know it to be true, crypto is correlated. I mean, crypto up and down the same time a lot, especially the main ones. So now you got a tricky situation. If you have limited capital and you want to trade, what do you trade? Do you trade Bitcoin? Do you trade Ethereum? Do you trade some other names? And what if they all kind of go up at the same level in the same time, and they kind of all go down in the same levels at the same time, roughly? And there has been a lot of that. So you really need to determine what is the correlation amongst crypto assets. If you're going to try and trade a portfolio of crypto and it's highly correlated, then you're not really trading a portfolio. You're trading one market. So you really have to determine what is the correlation amongst the crypto assets. Now, if you want to take a flyer, some small change on something, then it becomes like a long option profile. Okay, I get that. But when it comes to trading a portfolio, you want to have a portfolio of assets that are not typically correlated. If your risk management strategy is such that I'm going to trade, I want to have no more than 20% of my portfolio in crypto, all that crypto is correlated, it's messy. So what do the professional trend following traders do? They will have a situation where crypto is one piece of their portfolio. It's not all their portfolio. That is something people really need to come to terms with, because you can't get away from the math. I know a lot of things are really exciting and people want to jump in, but the number one goal is to make a lot of money. The number one goal is not to be right. It's not to have a big ego. It's not to brag to your friends. The number one goal is to make a lot of fucking money. That's it. That's the goal. That's the goal. What other goal is there? The other stuff is all bullshit. It doesn't make any sense.
Yeah, that's very true. I do think a lot of people in the crypto industry have a lot of ego. I mean, if you put in like, let's say $1,000 in some shitcoin and then all of a sudden it blows up and now you're a millionaire. Oh, I was right. I'm so clever.
You bring up an interesting point, and this is something that I can't make a prediction, but if you look at market history, you would have to think that at some point in time, there will be a significant number of people that are exactly the archetype you just described. They put 1,000 in, they made 1,000,000, then they lost it all. That's going to happen. Now, there'll be some smart people that say, you know what? I don't even know how I made this money. I need to take some chips off the table. I need to prepare for the downside. This actually connects very well with US stocks, because at the exact same time, essentially, US stocks are to the moon, crypto's to the moon. There is no situation in US stock market history where stocks have gone up forever. The S&P went down 50% in 2002. The NASDAQ went down 77% in 2002. The S&P went down 50% in 2008. Now, crypto, of course, has gone down much bigger amounts a lot of times. And so in that sense, I think that people listening should be saying, God, this momentum thing makes a lot of sense, because if I can be long the trends up and I can get out when trends go down, or I can be short, then you're more about riding waves. You're riding the bucking bronco. You're not trying to be a true believer that crypto will be the next currency or something. I would love for nothing better than for the United States Federal Reserve to get punched in the gut. But so far, that hasn't happened. At this moment in time, crypto is not a currency per se. It's not competing with the dollar, competing with China. So that's the thinking people need to have, though.
Well, I like that you're also kind of getting in on this topic of the Federal Reserve and whether this is really competing against the US dollar or the yen. Now, more than ever, there's being printed trillions of dollars. Even though we're in a crisis, the stock markets are going up, crypto is going up. How do people protect themselves against what the future could potentially bring?
The average American has got money in a mutual fund. And that mutual fund is at all-time highs today. Okay, they're feeling good. But what happens if that mutual fund, like Japan in 1989, went down 77%, the Japanese stocks? What happens if that US mutual fund drops 50%? Then they're not feeling too good. And then what happens if it stays down for 10 years? The point here is to not fall in love with the particular point in time you are at. Everyone can look at their account and they're like, okay, I got this amount of money and I've got this strategy. It's not permanent. It's not permanent, especially if your plan is just to take what the market gives you. So you can take what the US stock market gives you. Right now, it gives you all-time high. You can take what Bitcoin as a buy and hold perspective gives you, and it's close to an all-time high. But what happens if both of these markets drop 50% or 70% or whatever? Then you're taking what the market gives you there. So how do you protect yourself? You protect yourself right back to the beginning of this whole conversation with a trend following mindset, which is like, I'm not going to go from 51,000 to 25,000. I'm going to get out. I'm going to have a stop loss. I'm going to have a stop loss on everything. I'm not going to sit there and go, okay, US stocks are at all-time highs. Okay, they dropped 20%. They're coming back soon. They dropped 30%. They're coming back soon. They dropped 50%. They're coming back soon. What did it take NASDAQ 15 years or something to get back to its all-time highs after its 2002 lows? This is a choice of strategy people need to make. Do you take what the market gives you, or do you actively ride trends with a stop loss?
Okay. Let's say a person has like $20,000, $50,000, just saying a number, and that's their savings. They also have silver. This might be a little bit difficult for you to answer, but where do you think it's most safe to put your money right now? Let's say $50,000, for example.
I can't answer that because they would kind of be going against everything I've said so far. What people really need with that $50,000 is they need a plan. They need a strategy. They need a strategy that's got those 5 rules. What markets am I going to track, trade? When am I going to enter? How much am I going to bet? When am I going to exit with a loss? When am I going to exit with a gain? I can't tell anybody like, put your 50,000 here and it will go to there. Look, there's a lot of people that get paid to do that. But here's the dirty little secret about that style of investment advice. It's all bullshit because nobody has a fucking crystal ball. So anybody that's telling you, me, anybody that's saying, buy this and for sure this will happen. Okay, go look at an Amazon chart for the last 20 years. Go look at an Amazon chart. What did it do? The fucking thing went sideways forever. If everybody was so smart, why did everybody not buy Amazon 10 years earlier? Where were all the smart people then? I think it's less about trying to have the perfect bit of advice and more about saying, what's moving? Let me get on that moving train. Let's go. That makes more sense to me. Now, a lot of people don't want to hear that because a lot of people have been trained in school, jobs, employment, government. They've been trained to think something different. For example, I've got relatives that are no different. I have relatives, I could talk to them about this. I could talk to them about trend following. And then the next thing my relatives will say, well, where should I put my money? It's like, maybe I'm not the right person for you. I'm not dodging your question. I'm not putting the question down. It's a very normal, typical question. I just don't think it's where people should be. Here's a good mental exercise. Take the crypto chart, print it out, 10 years of Bitcoin. Print it out to where you've got like a big piece of paper like this. And then say to yourself, how could I have traded all of those up moves and all of those down moves? You could have just said, well, if I got in at the beginning, then I would just be long. And when it dropped 80%, I just sat there. Then it went back up hundreds of percent. Okay, then it came down another 50%. You could say, well, that's a strategy you could have taken. That involves a lot of prediction, like that would actually happen into the future. But if you just look at that chart as a scientific experiment and just say, how can I trade that? How can I make money? You can't see ahead. You can only see what you can see right now. It's going up, it's going down. It's going up, it's going down. If people can put themselves into that mindset, they're gold. That's a completely different way of thinking.
Yeah, I like that. That's a good mental exercise. And I think it's completely fine you're dodging that question because, like you're saying, nobody has a crystal ball. I guess that's the type of question that a lot of people would ask, right? Everybody's kind of hoping that there's some wizard who's going to be like, invest in this. And then 5 years later, you're a billionaire. You can't answer that, of course.
There's a new generation of wizards that come along every 5 years for every generation. I don't even know who the wizards are for people that might be 18 today, but there's got to be some wizard out there who will tell them, here's what to do. If you take this down scientifically, because I do think a lot of people in the crypto world want to be smart about things. If you take it down scientifically and break it down and say, let's apply some rules, let's have some risk management, let's stay in the game and let's not go broke. Something like trend following makes a lot of sense.
Well, what would be some of the questions or the one question that you wish your students would ask you then?
I think that people don't look at what other people have done enough. For example, you can go back and you can find examples of trend following traders in the 1930s, the 1940s, the 1950s, the 1960s, 70s, 80s, whatever. This style of thinking has been around for a long time. If you can believe in that, that's a strong thing. And then I think the other thing is, if you know somebody else has done it, to believe that you can do it. I mean, for example, if no one's ever heard of trend following, they've never heard of these turtle traders that I'm mentioning today. If they've never heard of this stuff, but they hear a story of like some guy answered a want ad and was given trading rules and then was able to trade all markets with those trading rules and did not have to know the fundamentals of any crypto asset or any market. And if he did it, why can't I do it? If he got those rules, even if I don't know what those rules are completely yet, but if he got those rules, why can't I learn rules? Why can't I figure out rules? Why can't I go to find somebody? Or there's all kinds of ways that people can learn. There's no shortage of ways to learn. But I think that mindset, he did it, I can do it, is really important. Don't be like, I'm not smart enough, or I didn't go to the right school, or I'm not in the right country, or bullshit excuse, fucking excuse. Don't do that. Just be optimistic that you can figure it out. If people really approach this style of thinking that way, they'll have a nice life.
Sure, I like that. So basically looking at the history, looking at examples of other traders who have maybe used the same strategy as you have. I've not really done that so much, but are there any places where you then go to like see how they traded or just read their books, or how do you actually do that?
Getting into the weeds now, and I'll tell you something about how I got started. I'm finding out about these kinds of traders and this style of trading. And then I kept finding traders that were doing something similar. I've become aware of this one group of traders, and they were doing trend following. And then there's this guy over here, and he's doing trend following. And they were all reporting their data through the United States government since they were regulated. I started going through their performance data. Why are unaffiliated groups, why are people not connected with each other? Why are they all making money in March of whatever year? Then they're all losing money in May of whatever year. Then they're making money in June. Then they're losing money in July, August, and September. And then they're making money in October. Why do these similar return streams? That was a real eye-opener for me, going back and finding those kinds of documents, digging in the bowels of government. A lot of those documents became the foundation of my books. Now people don't have to do all that nasty work that I had to do. But there's all kinds of ways. For example, even if you hear somebody right now say, like me, I say the phrase trend following. Okay, anybody that wants to go find out about trend following, the first thing they're going to do is they're going to Google trend following. Well, the first thing they're going to find is me. But trend following is not a phrase that I invented. You're going to find other people affiliated with trend following. You're going to find other names. You're going to find other books. You're going to find other authors. You're going to find other hedge fund managers. And before you know it, you're going to have this page of information filled with names and funds and strategies and all kinds of stuff that sends you down the rabbit hole. Take what I'm saying today, pull on the string and say, how deep can I go here? Assume that I'm completely full of shit. Assume everything I'm saying is wrong, doesn't work, it's nonsense, it's crap, whatever. Okay, fine. But now take some of the phrases that I've said, look through, find some of the names, and do the work yourself. Prove it to yourself. Trust me, but verify me. Don't accept blindly what I'm saying. Go do the homework.
I agree. Like, trading is not something you're going to learn in just listening to one single interview with Michael. If you go do some more digging, you'll probably figure it out. Michael, where do people find some more about you? Where do people reach out to you if they would like to speak to you about anything?
I'm easy to reach, trendfollowing.com.
And you also have a podcast?
Yeah, trendfollowing.com. They can find out books, podcasts, everything. And a lot of the traders that came before me, it's been quite famous, have been on my podcast. People can go on there for free and listen to just absolute legends. Many of the things that I've said today in different ways, different examples. Again, they can pull on that string and they can go dive deep.
Great, Michael. Well, we're kind of nearing an end here. I'd just like to say thanks a lot for your time. I'm definitely going to pick up Trend Following, your book, which you can find on trendfollowing.com. Is there anything else you'd like to say as a last note to any new traders?
Just be optimistic. If you've got a strategy, trends will come. If trends don't come, then the freaking world's over. Trends will come.
Well, I will just recap your 5 rules. What markets? When are you going to enter? How much are you willing to lose? How much are you willing to win? When should you get out before you win? The 5th rule is, how much are you going to bet? Do you have all these rules written down somewhere or more information on them on your website? Are there any particular blogs or something?
It's in the books. It's on the website. If I've got to put everything on a spoon with applesauce, then they'll never figure it out. But if somebody wants to go spend a few minutes, they're going to figure it out. If they want to send me an email and they want to complain and they want to bitch and moan, don't worry. I'll just delete your email. I don't care.
Well, let's end it at that then. People can reach out to Michael on his website, trendfollowing.com. Thank you a lot for your time, Michael.
Thanks. Take care.
I see a time when those awake will understand how to make money in up down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.